Forex Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And of course, as we continue on our Trading with a Purpose series, welcome to gold. So we've already looked at pound JPY, NAS100. Now we're taking a look at gold and we're breaking it down. Now, if you're new to the channel, welcome. We're going through a series, a year-long series, where we are following four pairs: pound JPY, pound USD, gold, and NAS100. And we're basically trying to apply our strategy that we use on these four specific pairs. And so every week we're going to take a look at one of the pairs, break down each individual pair as we go through the entire year, and talk about what's happening, the type of setups that were available, bad setups, wins, losses, cycles, everything. So if you want to learn the strategy, there's 400 and some odd videos already that I've already made about the strategy. So please take a look at the playlist of either Blueprint Summit or the 2024 mentoring series. With that being said, let's go ahead and get into it. As you can see, this is the entire week of gold that we just had. Now, I got to be honest with you, this type of week on gold or on any pair that you follow sometimes are hard. And I think not a lot of people talk about the fact that there are going to be weeks, days, even sometimes months where the pairs that you follow are just not producing or not moving how we would like them to move. And it doesn't matter what strategy you're using. Just to make sure that you understand that no matter what asset you trade, no matter what strategy you use, there are going to be times where there might be no trades for the day. There could be no trades for that week. There could be a very long month or two where you just don't seem to find the very good setups. And that's okay, and that's completely normal. Hence why you have at least, let's say 4 pairs that you follow that are completely different from each other that would allow you to kind of counteract that behavior. All right, so let's break down gold. So this is the entire week, as you can see, Monday through Friday. So there's a couple things that I want you guys to notice that we've already talked about, all right, in the last major video when we talked about accumulation, manipulation, and distribution. If you can just understand to see that in a market, you'll understand how you are supposed to react. Just quick breakdown, right, of accumulation, manipulation, and distribution. The accumulation is basically consolidation, and then we have, let's say, manipulation, and then the distribution obviously is the actual move or the trade itself that we want to be in, right? It's essentially, if we take a look at this model here, the accumulation is here, the manipulation is up here and down here, and then this long move is a distribution, and essentially that's the actual trade. All right, now what I want you guys to notice is that we might not have been able to get a lot of trades, but I want you to see if you could spot that model that I just put on the chart. All right, and I don't mean in a sense of like within the boxes, but what I mean is just by looking at the chart, can you identify those areas, right? And so here's the areas that I'm talking about. Right here is your accumulation. Okay, right here, this area here, that's your manipulation, and then this is your distribution. Okay, now the way that this breaks down is, or the key factors to this is the obvious part of movement sideways, accumulation. Right after this, we know that they're going to manipulate the market, which is essentially draw down on either the top or bottom. We don't care whether it is the top or bottom. We just want to be able to identify it, right? And so here it happens. They manipulate down, and these are kind of pretty easy to see because they're very sharp moves followed by reversals. All right, so in this case here, you're looking at a accumulation period that basically went from 130 all the way through 2000, right, till 8 o'clock. All right, and then you essentially had your manipulation, which all this is just basically grabbing, triggering orders that are sitting below this support or above the resistance, wherever they want to grab them from. In this case, they're grabbing all of the orders that are sitting below support. Now, a couple things to notice. Obviously, you notice the big wick, right? And then notice how they never went below this candle. Everything's above that. Okay, the range that they're really targeting is right here. Okay, so just understand that this is the range that they're targeting. There's your range of accumulation, and all they do is go right below it and then immediately manipulate and then distribute, right? Now, if you just look at this area here, right, I mean, if you really look at it, you can see there's a 2-star doji here with a pullback. So, I mean, theoretically, right, that could be a trade setup that you could use if you wanted to. If you weren't using, like, you know, Asian session or whatever the case may be, if you were just looking at just the model itself of accumulation, manipulate, distribute. All right, now I want you to notice the very same thing on the next part here. So here is your consolidation. There's your box of consolidation. Here's your manipulation. And there's your distribution. You can clearly see the accumulation, the manipulation, distribution. Same type of concept. You even had basically the same thing, a star pattern here. And then immediately goes up, right? So those are the things that you need to be aware of. Okay, if you can just understand that concept, you'll be fine. Okay, when you see it, you cannot unsee it. All right, once you start back testing and just looking at a plain chart, doesn't have to be nothing with indicators or Asian ranges or anything like that. Just look at the chart and just spot the areas that are consolidating and see what happens afterwards. You'll see the manipulation and then you'll see the distribution without needing any time frames or any of that stuff. Just looking at the chart itself. Okay, here's another one. Here's another area of right there. There's another area of accumulation. Here's your manipulation, and then there's your distribution, right? Going back up again. And then right after that, there's another area right here, right? There's another area here of accumulation. There's your manipulation, and then there's your distribution. Okay, if you just want to trade this model without looking at boxes of, let's say, London or patterns or any of that stuff, you can do that. Okay, I would strongly recommend that you back test it first so you can have a very good grasp of what you're doing, right? But I just want you to understand that the model of accumulation, manipulation, and distribution is there whether you're trading Asian, London, New York, any of that stuff. If you're just looking at a regular chart, you could see it in the chart without any indicators or anything like that. Now that we've kind of established that, let's take a look at each day and let's see what is the actual breakdown of possible trades. Now, looking at the daily chart on Gold, you can obviously see that we have been in a huge uptrend. We're always basically in a longer term direction. We're always in an uptrend on gold. We have retracements and stuff like that, which is fine. But ultimately, in the long run, we're pretty much long term looking for buys on gold. A lot of things are happening. Just know that in the bigger picture, guys, when you look at the weekly, the monthly charts, gold is always in an uptrend. Okay, it almost looks like a Bitcoin chart. But knowing that, all right, knowing that, we know that we're looking for buys. All right. Now, going into the 15-minute time frame and looking at it from Monday's perspective. So here is Monday. Now, just ask yourself, if you're trading our strategy, okay, and you're seeing this type of price movement on a Monday, and you can see price action is basically just moving in between the high and middle. It's not even touching the top or bottom. It's like literally in the middle of that price action. All right. This is important because these are the important details that a lot of traders miss or don't understand. Okay. For me, so whenever I see price action moving like this, okay, and it's moving in the center of above the top and the middle of the range, and this is on any pair, not just on gold, but I need you guys to understand that that behavior to me is a big turnoff. Okay, so whenever I see that behavior, I know why it's doing that. It's doing that because it's bouncing off the 50, and the 50 is acting as a form of support in this case. So that's why it's not going to the middle of the range. The 50 is literally acting as a form of support, so it's bouncing off of it. Okay, I understand that. So whenever I see that behavior, it's not something that I'm interested in looking at for a possible trade. So to me, this is not something that I'd be looking for a trade in. Okay, I personally would hate that kind of price action. Me personally, just doesn't work well for me. It may work well for you. That's perfectly fine. But to me, it's just not something that I'm willing to risk money on. And that's the important part. You have to understand that you are not a trader. You are literally a money manager. Your sole job is to manage money and to distribute the money based on whether or not you think the probabilities of a trade that's going to be a winner is in your favor. Basically your edge, right? And if you start taking trades like this, okay, any trades with this kind of price action, and you start to wonder, well, why am I losing these trades? Well, look what you're throwing money at. You're being a horrible money manager. You're not putting into perspective what you're looking at. You're just wanting to be in a trade. Every day, a lot of you guys have the expectation of, I'm just going to be in a trade. I want to be in a trade. I want to be in a trade. I want to be in a trade. That's your mindset, right? So you start forcing trade setups that you have no business being in to begin with, because all your mind wants to do is just be in a trade. What good is it being in a trade if it's going to be a losing trade? Would you rather end the day, let me ask you this, would you rather end the day losing 3 trades, or would you rather end the day taking no trades? I mean, to me, it's pretty simple, right? But some of you just cannot fathom the fact of you not taking a trade on one day. Every day has to be a trading day for you. And every day for me is not a trading day. Every week for me is not a trading week. That's the difference, because I'm trying to protect my capital, because I know if I don't have any capital, there's nothing that I have to trade. As we go through this, and you can see the price action is just horrible, right? This is just accumulation. It's all this is. Okay. It's accumulation until it's not accumulation when you get the manipulation. But the manipulation happens like way later. You can see right here in Asian session. There's your manipulation and there's your distribution. Now I'm bringing this up because I need you guys to understand that if you're trying to trade a model of just accumulate, manipulate and distribution, then you don't need any of these boxes. You just need to look at price action, right? The boxes are just trying to identify the high areas of the time of when it's likely to happen. Okay, it doesn't mean that it's going to happen every single day like clockwork like this, right? Because obviously you could see in this example here, it didn't happen like that. You just accumulated throughout the entire 2 sessions. And in the slow session, supposedly, which is Asia, is when you had the manipulation and then the distribution happened, right? So I just need you guys to understand that. All right. So going into Tuesday now. Tuesday, we start again. After the distribution, we start doing what? Moving sideways and accumulating, right? And we start to see the same behavior. Okay. Start to see the same behavior of essentially moving in the middle and not really going to the top or to the middle of the range. It's just kind of floating there, right? Again, these are not the type of trades or behaviors that I want to put money on a trade. And so here's what I want you to notice is the fact that these are all very beautiful moves, right, that you're seeing happening. But none of these 2 days, right, have produced a move that fit our criteria, or at least for me, does not fit my criteria at all for trading. Price could have moved, or price moved so far, 1.5% or about 4,300 points, right? But for me, I don't care about how much it's moved, because to me, if there's not a setup for me to get into, then why am I going to be upset about price moving and going higher when the setup itself just did not meet any of my requirements? So looking at this day here, we have a major pullback, which is good, but look what happens after the pullback, right? It just consolidates and then just continues to drop off. There is nothing here, again, that would entice me to look at a possible trade. There's nothing there for me. Okay, there's nothing there for me at all for a possible trade. I think some of you guys may be looking at possibly like this being a pattern here, to trade, like a type 1, let's say, to sell. I mean, yeah, that is a pattern, but for me, at this particular point in time, I'm looking for buys only, so to me, I would ignore that. Some of you may be looking for reversals, which whatever, but I mean, if you're going against your directional bias, then that could have been a trade set up there. But for me, I'm only interested in looking for buys at this time, so I'm not looking for anything else. Nothing at all on Wednesday, nothing at all on Tuesday, and nothing at all on Monday. This is important because there's going to be days like this. Okay, this is just the reality of things, and I need you guys to understand that not every day is a trading day. Not every week is going to be the best trading week. So here on Thursday, okay, here's Thursday. Again, same thing. There is a trade set up here, but again, it's going against your bias here. It's going against my bias. So again, it's not something that I would actually trade. If you're going to trade something against a directional bias, right? So if we're going up, we're looking for buys because we're in an uptrend, right? And you want to look against the bias, right? The best possible, and I mean the best possible scenario for you in that is going to be to do it when it's towards the end of a cycle. All right, so think about that. The best reversals or the best anti-bias trades that you can take are going to be towards the end of the cycle. Well, why is that? Well, because if you're at the end of the cycle, you expect the peak formation to form, right? And so something like this pattern here, this type 1, for example, could have been the actual very top that creates the peak formation. So if you're going to trade against the bias, the best way to trade against the bias would be at the end of a cycle, when you've exhausted, 3 times ADR, 3.5 times ADR, or whatever. If you're going to do it, that would be the time to do it. But for me, I don't care about that. I don't care about catching reversals. I care about going with the directional bias that I have. And so for those purposes, like, this would not have been a trade setup for me. Could have been for you, okay? Could have been a decent one, I think. Basically, if you're looking for a short here, your entry, you didn't get a second leg pattern, right? So your entry's after the close of the 13 EMA, which would have been here. Your stop loss could have been there, or really you could have put it at the top, which is fine. And then obviously you're aiming towards 2-to-1 or closest structure for 2-to-1, which would have been right there, or essentially the Asian low, right? That's your 2-to-1 trade there. Okay, but again, for me, it's just not a trade. So we go into Friday now, and here in Friday, there is some potential setups here that I looked at on Friday, which the first one being a type 2 trade out of the edge, which would have been this one right here. So that right there could have been a setup. The biggest problem with that is the fact that the entry would have had to be up here, and to me that just didn't make any sense. That's too far from the low where you would need to put your stop. So the risk reward would not have been there for me. Also, you have the 50 there as well that you have to get through also. So would it have looked differently if you had maybe a 10-minute time frame? On a 10-minute time frame, yes, it would have made sense, because you would have had a railroad track that happened on a 10-minute time frame. I didn't look at it on a 10-minute time frame, so again, not a trade setup on a 15 that I would have taken. But on a 10-minute time frame, this would have given you a trade, and it would have given you basically a 2-to-1 trade right there off the rip. Okay, now if you missed that, or if you didn't pay attention to that, the second trade would have been in the US session. Now, if you start looking at it from this perspective, where you would have one leg here and then a second leg here, you could have a multi-session type 2 pattern. Okay, and then essentially you'd be looking at an entry after this right here. So you're looking at an entry, and a setup like this. You could have done something like that. So really the two types of setups that we look for, ideally, right, out of all the different setups that we look for, was all on the last day, on a Friday. Okay, so think of the psychology real quick as we zoom back out. Okay, think of the psychology that's happening in your mind as a trader by basically missing all of this. Okay, and now you're trying to basically trade the very last day of the week. And so depending, obviously, if you were looking at it from a 10-minute time frame or a 15-minute time frame, would have depended on whether or not this was a possible trade setup for you. But that's how it is sometimes. Okay, that's how it is sometimes. That was on a 10-minute time frame. On a 15-minute time frame, here's the trade. Here is there's your trade setup for a multi-session type 2 right there. That's almost a 3.5 to 1 risk to reward ratio on this, if you did not get in on the pullback, because there was a pullback here that you could have used. And so if you got in on the pullback, now you're looking at almost basically a 4 to 1 risk to reward ratio. So you essentially wait the entire week for one trade. Think about that. You wait the entire week for one trade. You see the market rush the entire week. Boom, boom, big pushes higher and higher and higher. And you're like, man, there's no setup. I missed it. There's no setup. I missed it. Well, what exactly did you miss? Because these pushes here don't meet any of your requirements for getting into a trade. So what exactly did you miss? Or would you just say that you protected your capital and you essentially followed your trading plan? And at the very end of the week, the last session of the week, you essentially had one opportunity to get in a decent trade. Okay? So what are the parameters of this trade here? You have obviously the first leg here is in London. The second leg is created on a manipulation area, because all of this here, let's take everything out, all of this here, right, is the accumulation phase, right? And then here's your manipulation, and then there's your trade. So out of the entire week, there's your trade, one trade that did meet all of your requirements, right? You had a pattern, you had a second leg pattern at that. You had a pullback, so everything was essentially there for you to take the trade. The question you have to ask yourself is, would you have been disciplined enough to follow the plan and not basically stop trading when there's crap to trade? When price action looks like crap, stop trading it and only trade when price action looks decent. And when price action, when it's something that you can visually see and be like, yes, I can see what it's doing here. So just understand that there's a difference between reckless and patience. All right, guys, so I hope this video brought you value this week, and I hope you got a better insight into gold and to really a lot of different things that are going to happen to you as a trader. Really, when it comes down to the fact is that you have to understand that you are literally a manager of money. You get to decide how you want to distribute that money. If you were running a hedge fund, let's say, would you have taken any of these trades during the week? Think about it. When you're managing somebody else's money, aren't you more careful because you don't want to lose it? So you're always dotting your I's, crossing your T's, making sure everything is perfect. So ask yourself, why aren't you doing the same principles for your money? Why is it only when somebody else's money is on the line? Think about that. Why? So as always, guys, if you need help, join us in our Discord community for Trading with a Purpose. And if you need help with peak formations, things of that nature, join us on FXM Plus. Like and share the video, subscribe to the channel, and we will see you in the next one.